So it's now episode 10. So we are now currently on the financial statements of the not-for-profit organizations. So I promise to talk about the statement of functional expenses in this particular episode. But before we go to that, let's go back to this statement of activities. And let's focus on the revenues and the expenses. Because actually, sometimes instead of preparing the statement of activities only, there are instances that the NPO is required to prepare a statement of performance. But don't worry, because the content of the statement of performance are only these revenues and the expenses. And that's it. Now, let's talk about the statement of functional expenses after this short intro. So, statement of functional expenses. But before we go to the statement itself, let's first have the theories. So, many of these theories have already been mentioned in the past episodes, but let me repeat it again. So, first, I've told you that this statement, the statement of functional expenses, classifies the expenses not just by nature but also by function. So, functional classification classifies expenses as program expenses or supporting activities expenses. And I've told you that program expenses are those expenses incurred by the NPO related to the main purpose or mission of the not-for-profit organization. Examples of those expenses are salaries of teachers in a not-for-profit school and medical supplies expense incurred by not-for-profit hospitals, for example. While supporting activities expenses are those expenses incurred by the NPO which are not directly related to the main purpose or mission of the not-for-profit organization. Examples are fundraising expenses and management and other general expenses of the NPO. And I've also told you that generally the NPOs are not required to classify expenses by function, but they are encouraged. So there is one thing that I've never told you yet, and that is there is an exception, which is the voluntary health and welfare organizations needs to classify the expenses not only by nature but also by function. So how can they do that? So, voluntary health and welfare organizations and those NPOs who chose to classify expenses by function have options. So, first option, they can classify it in the financial statements, specifically in the statement of activities. So, that's option 1. Or they can make a separate statement known as a statement of functional expenses. So that's the second option. And the third option is to classify expenses in the disclosures of the NPO. So that's their options. Now, let's go to the statement of functional expenses sample. So, as if this is the statement of functional expenses of BIMBM. And BIMBM is a voluntary health and welfare organization. And these are the expenses of BIMBM classified by nature. So we have salaries expense, we have transportation and travel expenses, utilities expenses, equipment maintenance, conferences and meetings expenses, depreciation, fuel and oil, and miscellaneous expenses. So the total expenses for salaries, for example, is 450,000. So in making a statement of functional expenses, you need to trace how much was used by program activities and how much of these salaries are attributable to the supporting activities. So for example, the program activities of BIMBM are research program and health programs. And for example, salaries of employees related to research is 180,000. So you put that amount here. And you also need to put the salaries of employees working under the health programs here. So, moving forward, let's say for example, the supporting activities of BIMBM includes fundraising activities and general and administrative activities. So, salaries of people working under fundraising activities should be recorded here. And the salaries of general and administrative people should be recorded in this column right here. And that's basically it. Now, before we go to the other expenses, as you can see here, you can observe that there can be more than one program activities and more than one supporting activities. And for simplicity purposes, we only use two each here. But in the actual setup or in the reality, there are a lot of program activities and a lot of supporting activities of a single NPO. But the concept on how to classify expenses to program and to supporting activities is just very much the same as what we are talking about right now. So let's move on. So let's assume that the total expenses for each of these items are this. So portions of these amounts, if incurred because of these programs, should be recorded here. And expenses incurred because of these supporting activities should be reflected in these columns. Okay? Next is you have to total these expenses. And that's it. One last thing before we finish this statement of functional expenses. If the NPO is already in its second year, there will be an additional column. You expect that for the expenses in the previous year, because the previous year's balances should be compared to this current year balances as if. And that's it for the statement of functional expenses. So let's go back here and let's put a check mark here. Now, let's talk about the statement of changes in net assets. Actually, it's very similar to the statement of activities. So let's first have the statement of activities. So as you can remember, this is the statement of activities. And in order to convert it to the statement of changes in net assets, you just have to erase the revenues and these expenses here. Or better yet, summarize this. Meaning, do the revenue minus expenses and you will get the net income, and you need to put it here. And if you do that, then the statement of activities will become the statement of changes in net assets. And that's it. It's as easy as that. So, check mark here. Now let's go to the statement of financial position, which is also popularly known as the balance sheet. And as you know already, the balance sheet is composed of assets, liabilities, and equity. But since we're talking about NPOs, so instead of using equity, we have here the net assets. So in this statement, in the balance sheet, the assets are classified into current assets and non-current assets. So current assets are those assets that are normally consumed or converted into cash within a year. Examples are accounts receivable, supplies, or note receivable from a business partner, for example, which is payable within a year. So that's the simple definition and simple examples. But if you wanted to be technical, if the asset is related to operations, like receivable from customers, it can only be considered as a current asset if it can be collected within a year or operating cycle, whichever is shorter. But let's keep this topic simple. And let's talk about that within a year or operating cycle, whichever is shorter, in other lecture videos, okay? For now, let's just define current assets as those normally converted to cash or normally used within a year, okay? Now, non-current assets are those assets that can be used for a number of years, like for example land, building, and equipment. Or it can be those assets that are convertible to cash but not within a year, like for example notes receivable collectible after, let's say, 3 years. So that's the classification of assets. So NPOs follow such classification also. So if someone donated cash, for example, but such cash can't be used because of time restriction of, let's say, 5 years, for example, then it will become part of cash restricted in the non-current assets. Okay? Also, NPOs follow the current and non-current classification of liabilities. So, as a matter of review again, let's stick to simple definitions. So current liabilities are liabilities which are normally settled within a year. And long-term liabilities are considered part of this non-current liabilities classification. And of course, we have the net assets, which is composed of the restricted and the unrestricted net assets. So unrestricted net assets is composed of tubers, and these are already discussed in the previous episodes. And if you haven't watched the previous episodes, just go to the description of this video. So that's it for the statement of financial position. So in summary, the NPOs also use the current and non-current classification for both assets and liabilities. So let's go back here and put a check mark here. And so once again, I would like to keep this video short. So let's talk about the statement of cash flows, the disclosures, and other information that you need to know about the accounting for NPOs in the next episodes. So if you have learned, please click like, subscribe, and hit the notification bell, and select all to be updated on my next videos. And see you on the next one.